Hello guys, welcome back to this channel. Let me share my screen. Okay, um, let's do analysis together. Let's do analysis together, guys. Yes, if you can hear me, type Y in the comment section, the chat box. Let me share the link so that people can join us. Share the link so that people can join us. Just a second, guys. So guys, if you are there, I'm coming. I'm still sharing the link. Now I share the link as quick as possible so that we can go to what we have today to do. So if you can hear me, type Y in the comment box. Type Y. If you can hear me, type Y in the comment section. Let me share the link. Alright guys, let's look at the market together. If you can hear me, type Y in the comment section. Type Y in the comment section if you can hear me. Let's go over to the chart right now. As you can see in the chart, I'm on AUD JPY. You can see that over there, and this is the monthly time frame. So on the monthly time frame, we just want to see overall direction of the market. You can see very clearly how what the market is doing. You can see clearly what the market is doing, creating higher highs, higher lows, higher highs, higher lows, higher high. So obviously we are supposed to actually be coming back to go do what, give another higher low. So because you can see that series of movement, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So we got another higher high right now, which the the extent of this high. Let's see extent of this high. So here, okay. Then we can move the Fibonacci to the next zone. Let's not use Fibonacci to mark this. Then let's see. After the breakout, we have one, two, three, four, 1, 2, 3, 4. Then we now start rolling down. So just check it. The market actually does similar things after the breakout. With the candle that caused the breakout, you count the candle 1, 2, 3, 4, which are bullish candles. Now, after the breakout, which happened here, we will now have one. Well, this one is the one that broke out. So 1, 2, 3. So after the breakout, so you can see the breakout right now. So that means we have now one. This one is a bearish candle, two, and this is the third candle. So after this third, okay, to see if we can get any reversal. Uh, that means this month have to close as a bullish candle as well. Before, so by next month we might actually be correcting to the downside to get our higher low. So if next month you don't do that, that means next 2 months it's gonna be that. So but this month obviously is supposed to close as what, as a bullish candle. Reading from the previous uh things that have been happening in the market. So if you can hear me, just type Y in the comment section and actually still drop anything you want us to look at after we must have finished with this one. Okay, so now what do we do here? We mark out our zones. You can see my you can see where all my listings are lining up pretty well here. You can see them here. So I mark out my zones, my area of interest. You can see this. This is a very major zone. Look at it. It pushed price out twice on the monthly time frame. Look at it. It pushed price from here as well. It pushed price from here. This is 2024 and this is 20. So so 2007 the market came, was the last high was here. So but this time around this year it took out that, it broke out this particular resistance that have been there since many years now. Okay, so that is a minor resistance right now. You turn to minor resistance or minor point of interest. The market can actually push back to and start considering or reversing from there to the upside. So, so as we have checked the previous things that happened in the market and what's going to happen in this market, so evidently we can see that this particular month what have been happening because price action or the market work around itself. What actually he has been doing is what he continues to do, because human behavior, because the market work with human behavior. That's why the market, when you see you be projecting in loss and all those things, it will surely hit your stop loss. So it works with human behavior. Human behavior never changes. So it's just something that revolves around. So the market will continue to revolve. So looking at it this way, you see that we'll have one, two, so three. So this third candle is gonna close bullish, which is the month of April is gonna close bullish on AUD, buying and buying and buying until this month ends. Okay, so that is the first one. Just then we have a psychological number of 20. Let's make this 20. Let's make it to a 20. So we are looking at that is 120. Obviously 100 and what 120. So this is what we are looking at the market right now, where he might actually be pushing into before we actually have our pull to the back downside. So we're looking at what 120 psychological level. So let's go to the weekly chart. As you can see, the weekly chart is short. We are moving very shortly. You can see that when you go to line chart, and see very clearly that you have that uh, retest and break. You have a break and you have a retest and continuation right now. So we are heading to the roof. 120 is our next level target. 120 is our next level target, which 115 and 120 is what we'll be targeting. Let's actually still put 115. So we are targeting 115 and 120. So looking at random numbers, 115 and 120. So this is what we are looking at right now. Okay, so let's go to the daily chart so we can do our analysis. So what we see is that we'll be trading the market to what? To the upside, nothing more, nothing less. Okay, you can see this this is a liquidity, this a liquidity, right? Let me check. Let me see this, if I should call this a liquidity or it is a liquidity. So obviously we have on the daily chart. Let's mark out our area of concern. These areas are where the market could come and turn around. The market could just come there and actually start, pushing back. Okay, so that is the only areas visible. So now we have this last, we have this breakup structure here. This is the last breakup structure we have here. Currently we have a shift in market structure there. Yeah, we have a shift in market structure at this point, and this is the guy that caused the shift, this demand level. And remember, we also have this support zone which are not yet been mitigated. So this market for me right now will not be turning around to come back to these zones. Is when it's doing its normal pullback, that when it's gonna do the major correction, I'll be looking at the market coming back to all these areas. So it's gonna take out all these places gonna take out here. So plus 115 and 120, as you already know, is our target for this market. So let's look at the 4 hours. Now I don't waste time in my analysis. I don't waste time in analysis at all at all. So you already know that. So we have a shift in structure here. I'll say a shift in market structure. So that's a shift in structure. And these can say this is a block of structure which happened here. Right about it. Right about it. Just a block of structure. Okay. Yes. Alright, so the next zone, let's align this to the demand level. Okay. Let's even get that support zone. Let's mark it out. Let's mark out that support zone. Okay. If you can hear me, type Y in the comment section. This is a demand level. Type Y in the comment section if you can hear me. Type Y in the comment box. If you are hearing me, type Y in the comment box. Okay. So, two is 1 hour. But there is no other cool. So, although this in the 4 hours, I can say this is the liquidity. I can say that this is a liquidity which need to be taken out. This market will be turning around. Okay, this on each 4 hours. Also, still gonna be looking at, yeah, because we already know we are not turning back right now. Just to the moon that will push till we meet our target, because this month is gonna close bullish. That is what the chart is telling us. Try to make us know that this month is supposed to close bullish. So you don't have to argue with the tape. You don't have to argue with the market. What you see is what you trade. Don't trade your assumption or anything. Just what you see. So if a sign goes, we see that the market wanna reverse. You cannot say otherwise, except you wanna lose your money. You lose money. No? Okay, so that here, and this is what we have been mitigated. This support zone have been mitigated. So you know why we are favoring the upside, because the market is bullish. So waiting for the market at this support or this demand level. So anytime we have a particular reaction and close above the zones, we pick our order from there and we join the market. So this is what another demand zone. So we can vividly place our words. So this is, so that we are placing this doesn't mean we are entering a pending order. We are placing it just to show that this is the area. 1:3 is what we are looking at. Yeah, 1:3. So this about 20 pips stop loss. About 20 pips stop loss. Yeah, it is narrowed to 20. It's now 20 pips stop loss, and Yeah, if you want, you can put opinion out on this because it's a very nice one, very clear and concise zone for the market to push back to. So all these things are liquidity. So these ones forming here, they are all liquid because we are looking at the market entering into our demand or our support level. So we are doing nothing right about now. So what do you think? What do you guys think? What do you think on this analysis? What do you think? Calling it a day. I think that's all I will do for today. All right. See you guys later. One of the ending this live stream.